Thank you. And good morning. Where did you stop?
We need the quality.
We look at qualities of a good forensic accountant. What did you say? What are these qualities? So we looked at, for you to be the best or a good forensic accountant, you need to have what? Both strong oral and written what? Communication skills. You should be able to communicate. You should be able to transfer information. You should be able to get what you want from the suspect or from someone who's suspected of fraud. Or you should be able to gather information and present information in a way that is expected. What else? Should have good computer skills. Why computer skills? Why should someone have the best computer skills as a forensic accountant?
I think due to the advancement of technology, most of the things are computerized.
Okay, so most of things are automated, isn't it? Yeah. And there's advancement in technology, and most of the fraud is done through computer, isn't it? So they are being done using computer software. So people sometimes confuse others using information that they compose on computers. There are different softwares that can mislead you. So sometimes they send you messages, sometimes, so there are a lot of things that are done. So you need to be an expert. You have to have an in-depth knowledge about computer. If you are if you're investigating an accountant who is using an accounting package, for example, a QuickBooks, Pastel, ACPAC, and what have you. What it means is, you as a forensic accountant, you should have advanced knowledge about those computer packages. And you have to understand them. How can someone use computers or those packages to manipulate figures? So that should be your core objective when you are trying to pursue a career in forensic accounting. What else did you say?
You should be able to financial planning and various skills.
You should have experience in financial planning and management techniques. So, as someone who is an expert in financial issues, in this case we're looking at a forensic auditor who is competent, who has vast knowledge. In the course of having that vast knowledge, you should be able to have knowledge and experience in financial planning. Altogether, at the same time, you should be able to have what you call management techniques. How is management all about? What are the techniques that managers use in the accounting environment? What are financial plans? Are you able to project? How do you relate financial plans to the actuals? If you have a budget, how do you relate to the actuals? How do you analyze, do the variance analysis? How do you interpret that? So that knowledge about planning, that knowledge about budgeting, that knowledge should be with you, isn't it? You should be able to possess such kind of knowledge. What else do we say?
Thorough auditing and risk assessment skills.
We should also have, we should also have what we call a thorough knowledge of auditing, risk assessment, and fraud detection, isn't it?
Yeah.
Forensic audit It's about investigation, isn't it? It's about detecting. You can detect a fraud to tell whether there is fraud, or you can also use your skills to control fraud from taking place, isn't it? So, for you to be able to detect that fraud, you should have skills in auditing, or another skills in risk assessment, isn't it? So we looked at auditing as an independent examination of what? Financial statement, isn't it? You are trying to examine financial statement independently. So you're looking at income statement and try to check the revenue, you're trying to check cost of sales, you're trying to check the gross profit, operating expenses, and the net profit, isn't it? So you should have skills of independently examine what you call the revenue, to say how, if you say you generated 5 billion, how did you generate that? So you should have skills to analyze that revenue and should be able to come up with evidence to support that claim in the financial statement, or to work against what is being claimed in the financial statement. You say, no, I think from the analytical procedure I've used, from the analytics that I'm trying to work on, or worked on, it has revealed that the company did not produce the revenue. So those skills should be there, isn't it? Yes. At some time, risk assessment. Are you able to tell that this is a risk? Are you able to tell that this environment is risky? Are you able to analyze the environment and tell the risks that this company is exposed to? Isn't it? We define what the risk, isn't it? What did you say on the risk? What did you say? What is a risk, my dear?
Uncertainty that is uncertainty that will happen or something will take place unexpectedly.
Okay. Okay. So we say a risk is anything. And this anything could be big, small, could be good, could be bad. Anything that you think about it. But that thing has the capacity of preventing you or the business from achieving their objectives. It has the capacity of what? Delaying you from achieving your objectives in time. They can also make you achieve different what? Objectives, isn't it? From what you said. So anything that is tampering with, that is trying to play around with your objectives, that one is a risk. So do you have, it could be that the environment, maybe the company doesn't have controls or internal controls or systems or procedures to safeguard or to protect its assets or cash. Now, that's a risk, isn't it? So that risk could result into loss of what? Funds, money could be used for unintended purposes, people could abuse assets of the company. So, you as a forensic accountant should possess such kind of what? Skills to tell, to say, this is a risk, and this is how you could mitigate this particular risk, or this is a risk, this is the impact if you don't do this, this is what will happen, and this is how you would mitigate that kind of what? Risks. So you should be in possession of those skills. What else did you say?
Should be able to interview and be able to give information.
So you should be able to have skills to interview a suspect, isn't it? In this case, we're looking at should have those three. fraudsters use tricks, isn't it? To manipulate someone, to get money from someone, to get financial benefit from someone. Now, you should have skills to enable you to make someone give you the information that they are not willing to give you, isn't it? You should be able to be persuasive enough. You should be able to convince someone to start telling you what they have never told anyone before, that they are not willing to tell you. Because what you need is to get to the bottom of that, isn't it? So what is happening? We are suspecting this, we need to get information, and this is the person is supposed to get information from. So those skills, should be able to talk well, should be able to have interviewing skills. Okay. So that's what we discussed. Now, let's look at forensic accounting, education, and specialties. Forensic accounting, education, and what? Forensic accounting, education, and specialties. You know, anyone can become a forensic accountant or a forensic expert. But in this case, we're looking at someone who is an accountant now would want to further his or her career in forensic accounting, isn't it? You're an accountant, very good. You can prepare financial statement, very good. You can interpret financial statement, very good. You can analyze financial statement, very good. You can produce very good reports, very good. But we would want you to have additional skills so that the way you look at the financials should be different from the way some accountant would look at them, isn't it? Because you have extra skills, forensic skills. So you're looking at it with a forensic eye. While other accountants will look at it with a normal eye, isn't it? An ordinary eye, isn't it? But you have a forensic eye looking at the same transaction. Someone is seeing revenue as 5 billion. You're looking at revenue as 4 billion. Or you're looking at it as 6 billion. You see? So the question is, where do you get the 6 billion? Where do you get the 5 billion? Why are you different? Because you're looking at the forensic eye, someone is just looking at an ordinary eye. He's convinced with what is being presented. But you are now trying to question. You are trying to be skeptical, professional skepticism. You are trying to have a question in mind. How did they get this? So by asking those questions, you are able to detect, you are able to suspect. You are not, you are not convinced to say, so you're trying to dig down, to dig. Where are we getting this? What's the basis of this? So that's what I'm trying to look at it. So I'm saying, when you want to get a career in forensic accounting, or you want to further your studies and specialize in forensic accounting, so there are a number of the various professional accreditations that accountants can obtain to further their career in what? Forensic accounting. So you may decide to become or to sit for Chartered Financial Analyst Certification, CFA, isn't it? So you can sit for Chartered Financial Analyst Certification, where you will learn specific, important skills, experience, knowledge about forensic accounting, isn't it? So after being certified that you are a chartered financial analyst, you should be able to have knowledge better enough, knowledge that is above the knowledge that other accountants have, isn't it? So because you are now becoming a specialist in financial analysis, isn't it? So you are able to obtain financial information and critically analyze it, whether it has been presented well or not, whether there are issues with the information. If you are given financial statements, you should be able to interpret them critically. You should be able to investigate, to get information about the information that is presented in those financial statements. So you can become a chartered financial analyst. Well and good. Sometimes you can also become a certified public accountant. If you go for a certification in certified public accountant examination, CPA, you also have skills. So that's what I'm saying. You have an option to choose. After doing your first degree, you can choose if you want to further your skills, if you want to be an expert. After your first degree, you'll be, because you have gone through the forensic accounting, isn't it? You have skills. Okay. You have skills that will help you in your day-to-day activities. Assuming you're an accountant, when you're presenting your financial statements, when you're preparing financial statements, when you're doing your bookkeeping, you have that in mind. You say, I'm a forensic accountant, or I've done forensic accounting. So whatever I'm doing here has to be ethical, and I have to present matters the way they are. Whatever I'm presenting here should reflect what is on the ground. Never overstate revenue. Don't understate revenue. You cannot overstate expenses. You will never understate expenses, because you know the reason why. You know the dangers, the risks that would come if you do that. Okay, and that's an ethical. So, yeah, you can also look at. You can also sit for financial risk manager certification. Financial risk what? Manager. So you'll be looking at financial risk management. So your specialty is in financial risk what? So you can decide, say, no, I'll only specialize in financial what? Risk management. So you become an expert in that area. You become someone who with vast knowledge. So people can engage you to conduct risk management, financial risk management activities. Okay? So you can also go for financial modeling and valuation analyst. Financial modeling and valuation what? Yeah, so you become a valuer, you become, you specialize in financial modeling, different models that we use in finance. So you become an expert in that particular area. So when you engage, they'll engage you based on the skill that you have. If they want someone who would actually, if they're looking at a financial analyst, if you are a chartered financial analyst, what it means is the assumption is you have skills to do the assignment that they are looking for. If you have skills in risk management, or a risk manager, they'll actually hire you based on that. So there are a number of professional accreditation that we can do if you want to become experts in the areas of what? Forensic accounting. Now, basically, most forensic accountants are certified public what? Accountants, isn't it? Who are using the scientific method to detect fraud. Altogether. So they are basically certified public accountants who can use their scientific what? Method to detect fraud. And the reason why we have forensic accounting is to detect fraud, isn't it? Because here we're studying fraud and forensic accounting, isn't it? It's a forensic accountant who has the capacity to detect fraud. Now, For you to detect fraud, you need to have what? You need to have those skills. So you have to be a certified public accountant. Now, we have done a number of things in this unit. Now let's move to unit 2. I just wanted to look at, basically I wanted to look at, just to have a recap of what we discussed last time, have some time to finalize the topic, the unit. Now, so under unit 1 we have looked at, it's about introduction to forensic accounting and fraud examination. So we have looked at, we defined what forensic accounting is all about. We looked at the background of forensic accounting. We discussed forensic accounting as an investigative engagement. We looked at composition of forensic accounting, and we were looking at, we also looked at introduction to fraud. And we also looked at the role of forensic accountants in an environment that is fraudulent. Then we also looked at the disputes that accountants or forensic accountants are engaged to actually help to resolve. So we discussed a number of disputes, isn't it? So we looked at qualities of a forensic a good forensic accountant. So we have looked at forensic accounting education and what have you. So we can move on. I'll share the presentation or the PowerPoint so that you should be able to have notes on that one. Now let's move on to Unit 2, where we'll be looking at forensic accounting legal framework. So we don't have it just here. So we're looking at forensic accounting legal environment. Now, do we have so basically I'll be looking at the legal system. Forensic accountant doing their work legally, are they protected? Do we have the terms of reference for a forensic accountant? Where do they get their powers to practice? Not together? So are they protected? Do we have a legal system that would protect them in Malawi or anywhere else? Now, let's look at nature or legal framework or legal system. Framework or another what? System. Now, what we, in the first unit we said, when a forensic auditor or forensic accountant does his work, the main reason is to present the findings before the what? Before the court, isn't it? Yeah. The court is looking for evidence. Okay. Someone has gone to court with a dispute to say, I employed this guy as an accountant, and money is missing. Money worth 5 million is missing in my office. Now, I'm suspecting him to be a thief, isn't it? Now the question is, but the court cannot just make a decision. The court would need evidence, isn't it? To prove that this guy is really a thief or not. Now, who is going to get that evidence? The person who has to do that, who has to provide that evidence, is the one who is an expert in that particular area, isn't it? In this case, we're talking of money. We need to get someone who has vast skills in finance, isn't it? Someone who has a background in finances, understands bookkeeping, understands fraud, understands financial management, isn't it? So we're getting a forensic accountant to produce a report. The report that will go to court and present before the magistrate, before the judge, to say this is the evidence I've captured, isn't it? So it means that person has to work within the legal system. Okay? Now, what do we mean if you say a legal system or legal framework? Because we're looking at the forensic accountant within the what? Legal system, isn't it? Yeah. There are laws that are protecting him. There are powers that are there to justify his work or to give him powers to do his work, isn't it? So, when you say a legal system, we're referring to a procedure or process for interpreting and enforcing the law. I see? The legal system is a procedure, a process for interpreting and enforcing the what? The law. It goes further, it elaborates the rights and the responsibilities in a variety of what? Ways. So within this context of a legal framework or legal system, there is an interpretation it helps to elaborate, or it elaborates the rights. What are the rights and the responsibilities in a variety of ways? For example, what are the rights of a forensic accountant? What are the procedures they need to follow? They can do their work up to what extent? Altogether? Are they within the scope? Maybe there's a scope creep. They have gone beyond the scope, or they have gone beyond their powers. So that legal system is there to actually provide the procedures, and system that will provide procedures or processes for interpreting and enforcing laws. Now, we know in Malawi there are 3 major legal systems, or in the world, right? And in Malawi as well, there are 3 legal systems, isn't it? Yeah. And that consists of what? I hope you've done that. Business law or company law. We have civil law, common law, and also religious law worldwide, isn't it? So worldwide we have civil law, common law, and the religious law. Now, in Malawi, we basically adopted English law sometime back in 4th August 1903, 1902. We adopted English law because we were colonized by what? See? So that means our legal system is fashioned on the British system, which is common law. Okay? So where our legal system is based on the common law. Now, what is a law? We're just looking at the background of the legal system. I'm not talking about, we should be able to understand that we have laws there, common law. We have different kind of statutes that are protecting you and I, or the forensic accountant alike. Now, when we talk of a law, what we're talking about legal system, the laws are adopted from common law, the British law. What is a law, in other words? How do you define law?
Law can be spirit will be followed by being in a ceremony or organization.
Okay. So a law, yeah, that's true. A law can also be defined as body of rules for guidance of human conduct. A body of what? Rules for guidance of human conduct, which is imposed. Which is imposed imposed upon and enforced among the members of a given state. So I'm saying it's a board of rules for guidance and what? For guidance of human conduct, which is imposed upon and enforced among the members of a given state. So the main aim of law is to attain justice in the society. So the main aim is to have justice. Okay, justice to prevail. Now in this case, the main aim of forensic accounting is to attain what? Justice, isn't it? Someone would want to, someone is looking for justice. You have been accused of theft and you go to court. It means you're looking for what? Justice, because you want to prove yourself clean before the court. So before you do that, you need to have that forensic skills, isn't it? Or you need to have a forensic accountant to help you conduct or to help you generate or provide evidence that can be used before the court of law. Now, we're not focusing on law as a broad topic, but we're simply looking at we as accountants, we are protected by specific acts or specific rules that are within the constitution or that are within the board of rules, isn't it? So now let's look at we'll look at the legal framework, but now let's look at accounting rules in Malawi. Okay,
Yeah.
do we have rules in Malawi that are guiding accountants? So look at accounting rules in Malawi. You know, in Malawi, we have accountants, isn't it?
Yeah.
The same way we have accountants in Zambia, Europe, talk of India or China, what have you. We also have accountants here. Now there are specific rules that govern the accountant, that guides you as accountant. Now, a forensic accountant is an accountant, isn't it? He is also governed by those particular laws, isn't it? For example, in Malawi, we have adopted what we call accounting standards. Okay, accounting standards. In this case, we're talking about IFRS or IAS, isn't it?
Yeah.
What's IFRS?
International Financial Reporting.
So we have the International Financial Reporting Standards and we have International Accounting Standards. Altogether. The Companies Act, before we look at this, what these are, the Companies Act under our Companies Act, the Companies Act, the list of rules that is guiding companies, small and medium enterprise in Malawi. The Companies Act number 15 of 2013. Okay. Our Companies Act of what? 2013 stipulates that financial statements of all companies must be prepared in accordance with IFRS or IFRS for SMEs. Okay. This is a Companies Act, isn't it? The Companies Act is just a branch of rules for companies. The one is a branch of the main constitution. So they've just extracted the provision in the constitution relating to companies, isn't it? In the NGOs Act that talks about NGOs, we have Taxation Act that talks about taxes, we have Companies Act that's talk about companies, isn't it? There are a number of acts. So we cannot read the whole constitution, but we have to read relevant information for our specific field, isn't it? Now, all companies in Malawi are governed by Companies Act. If you have a company, whether limited by shares or limited by guarantee, that company will be governed, will be under the provisions in the Companies Act. So one of the provisions is to prepare financial statements in accordance with what? International Financial Reporting Standards. Altogether. So why are we relating these to foreign accounting? What I'm saying here is that it is mandatory that we provide financial statements, that we produce financial statements. But those financial statements should be in compliance with the provision of what? International Financial Reporting Standards or International Accounting Standards. We adopted this and we comply with this. Now, you know that whatever we do in accounting is provided or is supposed to be in compliance with the provision of international accounting standards, isn't it? Now, why do we have standards, these standards? Do you know any standard that we have? Why do we have IAS and at the same time also have IFRS? Now, let me give you a simple background. In the beginning of accounting, every business or every company used to prepare financials in the way they want. I have a company in Malawi, for example, the company is in Northern Region. My accountant will do the way they want. Southern Region, they do the same how they want to present the financials. So the financials could be different, or the presentation of figures could be different. Even the captions could be different, isn't it? Now, if I have a company in Malawi and I decide to open a branch in Tanzania find that now they'll use their own standard. They used to prepare their financials in a different way, different from how my accountant would do that in Malawi, isn't it? Now, if I decide to open a branch in Tanzania, which means the accountant there will also have to produce the financial the way they want. Now, that was a problem, isn't it? To have uniformity in terms of financial statements. If you want to know how much you have made or how much you have spent, it became a problem, because what you consider as an expense is not what I would consider as an expense, isn't it? What the other person would consider as an expense will not be considered as expense. What I consider as a revenue, you will not consider that as what? As revenue, isn't it? So that's when they said, no, why can't we bring something standard or something that is uniformity, something that is uniform, isn't it? It has to bring what we call uniformity. So that's when the standards, the accounting standards came into existence. Okay. So the accounting standards are there to provide uniformity, so that if you are an accountant here and you're prepared financial statement, isn't it? Which means those financial statements, the figures might be different, isn't it? But the layout will be the same. If someone is in India or someone is in UK, also preparing financial statements. If you take the financial statement in India or UK, and you take your financial statements, you put them together, they'll have the same what? They have, isn't it? They'll have the same presentation of the figures will be presented in the same way because you are all following the same standard, the same provisions in the standard. So we have accounting standard. So yes, you discover that we used to have about 41 what? International accounting standards. Is it? International accounting standard 1 up to what? Up to 41. 41 is what? That's biological assets. So, each standard, please, your accountants. I'm surprised you seem to be unaware of standards. Do you know what standards are? Do you know any accounting standard? Because you can't be an accountant if you don't understand standards. How are you going to prepare a financial statement if you don't know accounting standard? Because International Accounting Standard 1, either IAS 1 or IFRS 1 will tell you how financial statement is supposed to be prepared. The setup of financial statement. So if you don't know that, how are you going to graduate, my friend? Where are you going to work? Do you know any standard, my dear? Oh yeah, can you mention? But which are you okay? Well, this is a must for you. It's a must to know these standards. It's a must. It's a must because what we need to do is you can still start. Yes. You can still looking at what you need to do is start studying those standards. Not studying for the sake of exams, you may, but for the sake of your knowledge, isn't it? Because wherever you go, if you talk of inventory, for example, inventory, there's a standard related inventory, IS2, isn't it? So you have to understand what is IS2 about. So it talks about inventory, how inventory is presented. How do you recognize inventory in the financial statement? How do you recognize stocks? How do you present them? So anything that you have to know about inventory, you actually find it there. For example, if you are preparing financial statements, you need to comply IS1, presentation of financial statement, IS1. For example, will tell you that when you are preparing financial statement, financial statement should be composed of what? Statement of what? Financial position. Should consist of what? Statement of profit and loss and other comprehensive what? Income. Then it talks about statement of what? Cash flows. It talks about statement of what? Changes in equity. Then it talks about notes to the financial. So you cannot prepare you cannot give me financial statements if those financial statements do not show the financial statement of financial position, statement of profit and loss and other comprehensive income, statement of what? Cash flows. So this is IS1, will tell you. So if you don't know IS1, then you're not an accountant. You guys have to go back to first year. So, but it's not too late, eh? Yes, yes, sir.
How do you get to memorize and remember all those standards?
How do you get to memorize and remember those standards?
Yes, we know them. We form students and then they just need to be the laws to remember.
You don't have to memorize them, you just have to know them. That's not it. Eh? Of course, there are some standards that you can't learn away from them, isn't it? For example, IS1, IS2, IS7, about capital statements, huh?
So, kosi kusema ni ya wika ya muna kusa mawaje.
Yes.
Iya muna kusa mawaje mawaje. Iya muna ya ndio sio ya wika ya wika.
Oh. Okay.
Mungu sasa hivi baada ni sababu ya rasmi. Bwana ndio sababu yeah.
Yeah, so you have to, but you can't learn away from them. You have to know them, all of them. You have to know them. But what are some that are very important? For example, the IS16, which is PP, eh? So PP, you have to know PP because that's the core objective of the branches. You have to know the PP in and out. Okay. So what I'm saying is, you have to master the standards. You cannot memorize them in a single time. So what you need to do is, today you can say, today I'll look at IS1. I'll only focus on IS1. So you have to understand this, each and everything. Look at everything that is in IS1. Then next week I'll look at IS2. Inventory. So yeah, so that's very important. Now, so what I'm saying is, the first thing, we have the accounting standards, IFRS and ISZ, which are guiding us. And in Malawi, there is that provision. The Company Act allows us to comply with those things. So if you are a forensic accountant, you are simply trying to enforce that, or you are simply to check whether these guys are complying with that, because you are protected by the Companies what? Act. Can you see? So, additionally, we also have accounting regulatory bodies, or accounting regulation what? Bodies in Malawi. Zona? Who are these bodies, accounting regulation bodies? Now that body, ICAM, isn't it? So the ICAM, which is the Institute of what? Chartered Accountants in Malawi, isn't it? This one is a professional body. It was established out of a merger of Malawi Accountants Examination Council, which is PIPE, and Society of what? Accountants, isn't it? Now, if you are a member of ICAM, it means you have the mandate to practice as an accountant, isn't it? Okay, right? So the forensic accounting is a component of accounting, and this segregated body is there to promote sanity in terms of what? In the accounting environment. So forensic accounting, accountants are there to detect fraud, and fraud is the one that these guys are training accountants who are able or capable of detecting those what? Fraud, isn't it? So you are supported by ICAM by becoming a member of ICAM. So when you're performing when you're actually delivering your services, you know that you have a backup, which is what ICAM is. ICAM is behind, isn't it? So those regulated bodies are the ones that are also promoting the act, or another promoting the forensic accounting services in Malawi, isn't it? So you did ICAM? You did ICAM? Sorry. So you need to become members for you to practice. If you want to be an accountant, you still need to be what? You also have to be registered. If ICAM, isn't it? For you to become a recognized accountant. And that is very important. Now, So the first one we talked about accounting standards, right? Malawi, we have accounting standards provided in the Companies Act 2013. We have regulatory bodies, and we also have provisions in the financial reports or accounting reports. The Companies Act, at the same time, our legal environment in Malawi requires us to provide what we call financial reports. If you are a company, every year you are supposed to submit your returns to what? Malawi Revenue Authority. At the same time, you're supposed to submit your returns to registrar of what? Companies, isn't it? So what it means is that at the end of the year, financial year, which is 12 months, your accountant will produce financial statements or accounting reports, which will be used to determine one tax payable. If you are submitting MMA will want to know how much you have generated and how much is your profit and how much is the tax that is payable altogether, and you need to comply with that. The self-company also need to know the number of companies they have and how those companies are fair, isn't it? So they will need a copy of financial statement so that they can put in their files. Now, the requirement is the financial statement or accounting report that we need to prepare in Malawi, because we have adopted the standards, international standards, accounting standard. We are supposed to comply with IAS what? 1. We're supposed to comply with IAS 1, which says financial statement must include. Can you see? Financial statement must include what? A statement of what? Financial position, statement of profit and loss and other comprehensive income, statement of changes in equity, statement of cash flows, and the notes to the financial what? Statements. How to get? So that's where the Act, the standards require us to prepare financial statement in conformity with what? IAS 1, isn't it? Now, as a forensic accountant, what is your law? To ensure that all financial statements are prepared in compliance with what? IAS 1, isn't it? If the statements are not prepared in this order, what do? You become suspicious, isn't it? 2. That's where now your role starts, isn't it? Okay. Because your law is to say, as a forensic accountant, your law now is the financial statement of financial position reflecting what is on the ground, isn't it? Statement of financial position in a statement of financial position. So you have that's where you have assets, capital, reserves, and what have you using it. Now you're looking at for example, if you look at assets, your role now starts here. Okay, we have prepared financial statement in compliance with IAS 1, but have we complied with other standards, isn't it? For example, you get the financial position and you look at the assets. Well, if you look at the PPE here, as property, plant, and what? PPE, your current asset, non-current asset, has to comply with IAS what? 16, isn't it? Now the question is your role to critically analyze IAS 16 and relate the provision of IAS 16 to what this company has what provide, isn't it? So it is your role as an accountant to master the provisions in the IAS what? 16, isn't it? Because you are looking at the financial statement. The environment in Malawi requires accountants to prepare financial statement in that order. We have adopted IFRS, we have adopted IAS, so we need to comply with that, isn't it? If it's non-current assets, for example, if you have this is BPA, property plant. So property plant, you check as a forensic accountant, what do? Your law will be, does the company have property? What is property? Do they know how to define property? Do they know what the property is in it? Does the company really own the property? Do they have my title deeds, my property, my claim? Property would be what? Land, buildings, isn't it? Okay. So now you're trying to critically analyze them. Are these buildings presented at the right price? Ready? What? Are we together?
Yes.
You find some who decide to, for example, with the land doesn't depreciate, isn't it? And you discover that the client has depreciated the land. And because you don't know that land is not depreciated, you cannot depreciate, that becomes a problem. But the building can depreciate, but at a small rate, between 1 to 3% of that can be depreciated, isn't it? So you tend to look. If you look at the plant, do they have plant? Do they own the plant? Equipment? Do they have those equipment? So critically you analyze. So ndekuti umatenga no asset ja caption ma isodoja ndikutenga no ma standards, the latest standards ndikubanga relate and critically analyze and detect whether there is a fraud that has taken place, isn't it? Deliberately, people may decide to they may decide to over depreciate their assets so that they reduce what? Revenue, isn't it? So that they declare less revenue. They are taxed less. They enjoy the rest of the profit, isn't it? So you need to critically look at that. They may decide to under depreciate their assets so that they generate more revenue. So that they would under depreciate assets, so that they reduce expenses, so that they have more revenue, so that when they present those financials to the donor or to the bank, the financials should look that the business should look like they are doing very fine. Yet on the ground, that's not the case. So if you have a forensic accounting knowledge or you have a forensic eye, we should be able to detect. It might happen that you are the ones analyzing financials at the bank, isn't it? So if you're looking, I think it's not how we do these things. Right? It might happen that you are the ones you are analyzing those financials, what donor, potential donor. So you should have those knowledge. If they're talking about, for example, they're talking about current assets, and they have inventory. In the balance sheet or statement of financial position, there is inventory or there are stocks. Now the question is, automatically here about inventory, you will need to find IS what? 2, isn't it? So you go to IS 2 and, so in this case you not go to IS 2, you should know what IS 2 is all about. So that you are able to relate now. Can you see? So, that's what is happening. You have to relate, okay, are they in compliance with what? IS 2 in terms of inventory. How to present inventory. Because, you go balance it and you discover that someone bought a bag of, someone bought 100 bags of maize maybe at 10,000 maybe 3 months ago. And 3 months ago the maize was maybe 10,000. But now the value may go up or go down, isn't it? Yeah. So you look at the net and realize that what? The value. So when you're presenting, some people will say no. So it can happen. Panopa, Shimanga is at Sika. Now it's by 8,000. That's the market value, isn't it? And yet, unless you go up 10,000. So someone will argue, I will still present that 10,000. But the question is, if you are to sell that maize now, are you going to generate 10,000? So why do you have to present it at 10,000? But what you realize now is less than 10,000. So you have to get the actual market value. So each of those requires someone who has mastered or has the capacity to master what you call those particular standards. Then, statement of what? Profit and loss and other comprehensive income. Akamati statement of profit and loss and other comprehensive income. How much was that? Accountants.
Statement will show you whether you made a profit or a loss.
Yeah, but there is an extension to that to say comprehensive income. So I want to know why do they say comprehensive income? Because we know when you are doing business, isn't it? Normal business, you are selling tomato or whatever you are selling, you have revenue from sales, isn't it? And this is the revenue and your cost of sales. This is your cost of sales. If you deduct revenue from cost of sales, what do you get? You have what? The gross profit, isn't it? And then you have operating expenses. Operating expenses, you deduct here, what do you get? Profit before what? Tax, isn't it? When you charge tax, when you charge tax here, what you get is what? Net profit, isn't it? Net profit or loss, isn't it? But now here they're saying, this is the profit and loss, isn't it? But they're saying profit and loss, stating the profit and loss and other comprehensive income. So my question is, you as accountants, fourth year accountants, you are third year, that's fourth year. It's not a joke, my friend. You should have accumulated enough and learned and what? No, isn't it? So why are they saying other comprehensive income? I want to know that. What is the other comprehensive income? Okay, profit and loss. We are looking at what the business is doing to generate income and what is business is doing to income other expenses, and the net between what you have generated and what you have spent, isn't it? The direct activities. But there are times whereby the company may have revenue that is not what? Related, or in other words, that is not connected to the business what? Activity, isn't it? For example, if you are selling, your business is selling maize, isn't it? And maybe you've made 1 million or you've made 20 million, and the donor decides to fund your project or to fund your business. I will pass 10 million. Ready? The 10 million is not your revenue, isn't it? You did not generate it, isn't it? 10 million is in a job activities. The 10 million has come from other donors, isn't it? Or it's a grant. It has also happened with you generate revenue and you take the money to bank. You deposit at the bank. And the bank sometimes they may decide to give you interest, isn't it? They thank you, say, no, we've used your money enough, now we want to thank you for overusing your money. So they may give you an interest maybe for interest worth 500,000. That is 500,000, it's not revenue coming from your business, it's coming from the bank. So this 10 million and this revenue and this 500,000 are other comprehensive what? Income, isn't it? There are other comprehensive. So we're looking at other income that are coming to the business, but not from the business activities. It could be a grant, it could be interest that you have just generated from the bank, isn't it? Even when you are presenting the financial statements, which means after gross profit, you add what? Other comprehensive income. So
Yes.
So if you have a grant, what will happen is when you face a gross profit here, you say add what? Add what? Comprehensive income. So you put grant or you have interest in, you put them there, then you're going to have what? Total what? Income. Then from the total income, you deduct operating expenses. So that's where it starts. Now, if you have other comprehensive income, what it means is that there are standards that you have to comply with. For example, in this case, if you have grants or donations, you have to comply with what? IS what? IS covered. IS 20. Grants and government entity. That's IS 20. Very important because IS 20 is very important because it talks about grants. How do you report my grants? Assuming on the project, we get to enjoy, and then Joy is getting fund from maybe USAID or UNICEF, any other donors. Now, if a donor, assuming donor has given you 100 million, okay, then that's in a particular financial year. Now the project runs for 12 months, January to December, 100 million. This is the money that have been given. Now the question is, come December, you are preparing financial statement, isn't it? Where there's a receipt and payment. Now, still can revenue, isn't it? And expenses. And then operating expenses, then what? In this case, if it's an enjoy to see car profit, it be either a surplus or what? Deficit, isn't it? Now the question is, come December, you discover that you have only spent 80 million out of 100 million. How do you report that? How do you present that report? Remember, what will be your revenue? How much will be the revenue and how much will be the expense?
The revenue would be, I think, 8 million.
Why?
Because that's the money was.
So, okay, it will be 80 million, not 20 million. I mean, not 100 million.
And I think the expenses will be 20 million.
Huh?
I think the revenue is going to be 80 million, and then the expense is going to be 20 million.
20 million hasn't been spent. You got a donation here, 100 million. That's what was granted to you, 100 million.
Also, you have spent 80 million.
You have spent 80 million.
The revenue is going to be 20 million.
Why 20 million?
Yeah.
At the beginning of the year, your account receives 100 million. You started operating. Come to the 1st December, you have spent 80 million. 80 million has been spent. Now it's time for you to prepare financial reports. How do you report? If you are an accountant, how would you report that?
The balance brought forward the 20 million from the expenses that have been.
Also, my question is, this is how we're going to prepare financial, assuming, so we're going to have revenue. Now my question is, how much are you going to put under revenue? Are you going to put 100 million? Are you going to put 80 million? Are you going to put 20 million? What are you going to put there?
I think 80 million. Yes.
Justify it.
Because that's the revenue, the money used for the
Okay, so we're saying it will be 80 million, eh?
Yes.
Okay. What's the reason? Because that's what we've used, isn't it? So, Okay, basically in an NGO setup, if you are donor funded, if a donor gives you 100 million, that's not your money. Okay?
Yeah.
In fact, it's a payable. The money that belongs to you is what you've spent. If you spend 80 million, that 80 million is your money. Unspent money, 20 million, belongs to the donor. That money belongs to the donor. So, what will happen here is that you are leaving your 20 million. So, that was expenses. I mean, you are leaving your 80 million. Your expenses also beyond. So, you have you have a zero as well. But however, a surplus or deficit is aware because of two things. When the surplus, the equity is either you got an interest from the bank, or else, if you have an interest. If you have a deficit, the equity is because of depreciation. Depreciation, usually you cannot tell the donor to take up an depreciate an asset and then would bank fund. So depreciation, if depreciation is 1 million, that means there will be a deficit of what? 1 million. Pamakama close, like in my outstanding payment, maybe you want to pay an auditor. So you still have to matching concept. You match, but still more payment is actually this next year. That will be accrued. My close will result in a deficit. So, how do you treat 20 million? Help it out. How would you treat the 20 million if you're an accountant? So 20 million will be treated as deferred income. Deferred what? Deferred income is a current liability. So on balance sheet, you see also tell me what? A current liability, which is what? Deferred income. So whatever we're doing here, we're simply trying to comply with what? IAS what? 20. 20 provides. IAS 20 will provide you this, how you report to plan. So the income will be 80 million. The 20 million will be deferred what? Income. So 20 million will appear in the statement of financial position and the current asset as current what? And the current liabilities. Deferred income is what? Deferred income. So that means an income that has been deferred, has been taken forward. So, because that money belongs to the donor. Donor at the with the money, you should send back the money, or the donor may decide to say, no, use the money. But what you have used is 80 million. That's what is your money. But the rest is deferred income, and that belongs to the donor. So can you see? So do you think all accountants will understand that? Some will say our revenue is 100 million, or spent 80, or made you have a surplus 20 million. But it's right in the appearance, but in actual sense it's professionally wrong. Seriously? So, another thing is what? What is a statement of changes in equity? When it says statement of changes in equity, what is it? Gentlemen, have you ever heard of statement of changes in equity?
Yes.
What is it? Accountants. What is equity? What is equity? What is equity, guys? If you start a business today with 1 million, that's your capital, isn't it?
Yes.
That's true. That is your capital, isn't it?
Yes.
You start business in January 2023 with capital 1 million. Come December, you make a profit here. For a profit here, 300,000. And you have decided to retain that money. You decided to plow it back. You decided to plow the money back to the business. Now, what it means is, if you're making a profit in that business, and that profit is plowed back, the profit will increase what? Capital, isn't it? Okay, then? So, come 2024, what will happen is our opening balance capital was what? 1 million. But we have retained what? Earning, isn't it? We have a profit that has been retained, or we have a profit that has been plowed back of 300,000. So that gives us what? A capital of 1.3 million, isn't it? So capital has moved from 1 million to 1.3 million. That movement is the changes in what? Equity. So it's equity because equity was capital plus reserves or retained earnings. Am I confusing you?
No, you're right. I just remember now what you say.
You just remember? Okay. So that movement from 1 million to 1.3 million, that's a change, is not? So we have to present that in the financials. So that would be a statement of financial changes, not equity. There are also times whereby you start a business with 1 million and decide, and the business makes a loss. Can you see? Of 300,000. So a loss will reduce what? Capital. So the capital moved from 1 million. You deduct a loss, which is as we get for, so it will be 700,000. You see? So that movement in capital is what we call changes in equity. You may decide to say, okay, nabanga loss, you have 30,000. But what I want is to pump in more money. You get money from somewhere and you pump in more money. So we are going to have what we call fund, or we are going to have what we call additional capital, or funds awaiting capitalization. So that additional capital will increase the what? The capital, isn't it? So if you have pumped in maybe 2 million, which means the opening balance was 1 million, there's additional capital of 2 million. Now you have 3 million as capital. So that changes in equity, that movement is what we call changes in what? Equity. That has to be documented. It's very important. My friend, there. Are you listening?
Yeah.
These are practical things, huh? If you go to the office, if today you go, if you start you get financials. If you see set of financial changes in equity, you should be able to understand. Okay, and how am I the capital? This is what happened. All these are the movement. Now we have this. So after 5 years, you were able to tell how have we been fared in terms of capital. Is capital increasing or decreasing? So as a forensic accountant, you have to have that knowledge so that no one cheats you, no one deceives you, no one lies to you, no one defrauds you, because you have knowledge that is above what those guys know, isn't it? So please, the financials should have that. Then we have a statement of what? Cash flows, And the IS, sir?
Should be 17.
The
17.
cash flows, IS1? Should be IS what? What? IS7? No. Cash flows? Not can be 17. Where do you get 17, my dear? Where do we get 17? Commando, to be honest with you, you need to understand, you need to know those standards. You might not know them at once, but find time to master them. Find time to master them. So, IS7, that's statement of cash flows, is very important. It's very, very important. IS16, property, plant and equipment, is very, very important. IS1, IFRS1, is very important. IFRS 3, very important. IS what? 45, biological assets, very important. For example, you are an accountant and you work for a company, you mean some of the assets in the bananas and sugar cane. You know, sugar cane to mature, it takes about a year or so, isn't it? Bananas, for them to mature, maybe they take maybe a year or so, isn't it? Which means that they are not just, they are assets, isn't it? So how do you account for them? How do you depreciate the sugar cane? How do you depreciate the banana? So you have to understand that. So IS 41 will tell you, will basically tell you how do you treat those biological assets. So that's why I'm saying an accountant should understand the accounting standards, audit standards, should know them. Okay, no? Just find time, don't waste your time. You know, most of you, just check on the internet. Today I just want to find out about IS1. I want just to read up IS1. You find, you read it, you understand it. Then you go to IS2 and what have you. So, statement of cash flows, we're looking at cash inflows and outflows, isn't it? What are the activities that are generating revenue? What are the activities taking away revenue in the business? So the inflows and outflows in that business should equal what is in the bank, isn't it? So cash flow balance should equal the money that is in the bank. So that should be there, so you have to understand. Then notes to the financial statements. What are notes? These are the notes to the financial statement. What do they mean? Oh. For example, revenue, they can tell you that you have generated revenue amounting to $20 million. Have you heard? And most of the time, that's a good thing. Okay. When you're preparing your financials, what they do is that you have revenue here, then you have notes here. Okay, and they'll give you the figure. So they'll say revenue, maybe revenue is okay. Yeah, you have revenue, then they'll put you note 1, maybe 10 million, isn't it? Which means not one is Imakara Programa Financials. That note will give you the breakdown of what? 10 million. 10 million consists of sales from tomato. sales from maize, sales from soya, sales from water. So that's a note, isn't it? So then they may not provide all the details of my financials, but they should be able to provide more details. My notes, isn't it? For example, balance sheet, they'll just tell you PPE, property was 20 million, plant was 30 million, equipment is 10 million, we have 50 million. But the question is, when you say property, so you go to note 5. Note 5 will tell you properties consist of buildings, the land, this land, so it's more of an asset register. Yeah, property, isn't it? Equipment, they'll tell you, equipment will have maybe laptops, this and that, this and that. So they will tell you all the details about what? Equipment, which is very, very important. So we've got to understand that. So those are the notes. So the financials should have notes. So when you are preparing financial statements, make sure the financials comply with what is provided in the financial, in the International Accounting Standard 1, isn't it? Which provides that financial statement must have what? Financial statement of financial position, statement of profit and loss and other comprehensive income, statement of changes in equity, statement of cash flows, and the notes to the financial statement. Now, apart from the accounting reports, we also have publication requirements. Altogether, in Malawi, publication requirements as one of the guiding tool in the course of discharging forensic assignment. Now, in Malawi, we are mandated the directors of the companies are mandated to prepare and send to all members of the company a copy of the following document within 18 months after incorporation of the company, and at least once every calendar year. And what are these copies? A profit and loss account and the balance sheet prepared and signed. In case of a public company or a group company of a public company, a report by directors. Thirdly, a report by the auditors. Now, the second one, in case of public company or a group company of a group company of a public company, a report by the directors. Now, you are mandated to publish or to send to all your members of a company a profit and loss account and a balance sheet which is signed. What it means is that companies are supposed to prepare financial statements, and those financial statements are supposed to be signed by directors, and those signed copies should be sent to all members of that particular company. It's a requirement, so that those members are aware of what is happening in the company. They are aware of how the company is faring. So that's being transparent. How do you get that? And those, why are they supposed to be signed? Because signing means the directors agree with the figures in those particular what? Financial statements. So the most important financial statement that they want to see is the balance sheet and the income statement, isn't it? They have to know, members have to know how much revenue was generated and how much expenses were incurred in the current or in the previous financial year, and how much profit or net profit has been generated. Okay, that will help them to make decisions or other future investment decisions in that particular company, or they'll be able to know, it will enable them to actually come up with other strategies. If they're making losses, they'll ask themselves, why are we making losses? Where did we go wrong? What can we do now to improve the profitability of the company? Do we need to pump in more money or not? Likewise, financial position, they would want to know what is the value of the business as of today. Are we doing enough to improve the value of the business? Do we need to revalue some of the assets? Maybe they are undervalued. So that one will help them to make decisions. At the same time, we're saying a report by what? By the auditors. What does report? Do we know what an auditor's report is? Do we know what does that?
Yes.
What do they do?
They analyze financial statements, see how authentic they are.
They analyze financial statements and see how
Authentic and transparent they are.
how authentic or transparent they are. Okay. So by the end of the day, what do?
They approve the financial statements
Uh-huh. So, as we said, auditors will come. Their role is to express an opinion on the financial statement, isn't it? So you give them financial statement, or you give them management accounts that have been prepared by accountants. So the auditors will go through the figures and look for evidence to support each and every figure in those financial statements. Revenue, where is the breakdown? How do you generate it? Do you have the evidence to support this? Cost of sales, how do you charge cost of sales? Or if you are direct expenses, how do you come up with figures on direct expenses? Do you have a breakdown of them? Operating expenses, are these expenses authentic? If you say if you said you bought maybe lunch for someone, or you had an activity where you invited people, you bought lunch and that, do we have evidence that this activity took place? Is this expense eligible? Okay, right?
Yes.
So if the auditor is satisfied, or whether it's satisfied or not, by the end of the day, the auditor has to issue an opinion in support of the financials or against the financials. So we'll either issue a qualified opinion, which means he's not in agreement with the financial statement, If the opinion is qualified, that means he is not satisfied. What is presented financial statement do not reflect what is on the ground. Or unqualified opinion whereby he is satisfied. Say no, whatever is presented here reflects what is on the ground. You see? Which is very, very important. So members of the company would want to know, would put much of their trust on the report that has been prepared by someone rather than employee of that particular company. So the employee of a company will prepare their financials and submit to members. The auditors will also will also look at those reports and prepare the independent report and additional opinion altogether. So auditors' law is to detect. They also check if at all there is fraud in that particular company. It's not that they will check if there is fraud. If they say there is fraud, they will qualify the opinion, and what they will do is they will advise the company to conduct a forensic audit. Not get it?
Yes.
Because it's the forensic audit that goes to what? That provides evidence in the court of law, isn't it? So they say we are suspecting these fraudulent activities, but we would advise you to engage a certified what? Forensic auditor to do the assignment. So the forensic auditor will come and gather the evidence, and that evidence will go to the court. Because if there's issue about fraud, it's a crime, isn't it? So that thing has to go to court, and you have to stand before the judge altogether. Any questions on the legal framework? So, can you say forensic accountants are protected? Do they have the basis for their assignments? Do they have teams of reference for their job, for their engagements? If someone wants to engage you as a forensic accountant, would you take up the assignment? If someone today would want to engage you as a forensic accountant, would you take up the assignment? You would. Why?
Because I feel that as being a forensic accountant, you're well protected, and there are guidelines that are there to guide you.
And what are these guiding?
We have companies acts, the accounting standards, the legal law.
What? What is legal law? Anyone else? Bana, would you take up the assignment?
We've said in condition that we
What conditions are these? And what are these conditions?
most of us security.
Sorry?
Security first. Security and
security, what about security?
if you me as an accountant, I have to be assured that I'll be protected.
So you have an assurance that be protected, huh? Now, from what we have discussed today, the first thing you need to consider is not, yeah, the environment is good, you are protected, there are TORs that you need to follow. You have the Companies Act, you have the standards, you have the number of requirements that are guiding you, that will make you to do your job effectively. But the first thing is to ask yourself, do I have the knowledge to do a forensic accounting assignment? Not together. If someone gives you financial statements and that person says these financial statements I feel they are not done the way they're supposed to be done, will you be able to criticize that person? Will you be able to justify his claim? Will you be able to challenge that? Will you be able to do that? So, the most important thing is you need to understand. But the assumption is you are accountants. You know what the accountants are doing. By now, we should be able to understand the process of what? Preparing financial statements. You know how to prepare financial statements. You know what is involved in financial statements. But our role is not to look into the preparation, but we are looking at how they are prepared. We are simply analyzing them to say, someone prepared this, but this is the standard, and this is how this have been prepared. Are they talking to each other? Is the standard talking to what has been prepared or not? So, do you have the skills to do that? So that's why I said the most important thing in accounting is you need to study. There's a lot that is happening out there, isn't it? You need to study. As a forensic accountant, you are protected. You have the addition to that, we also have the Taxations Act, isn't it? Who talks about taxes issues. There are a lot of fraud and activities relating to taxes, isn't it? So you have to understand what are the provisions in the Taxation Act. Okay. So it's very important. So you have to read, you have to study, you have to understand the provision, the Companies Act, look at the standards, look at that and that. Very, very important. Do you have a question? Any question? So we can stop there for today.